Hello everyone. This is the pre-market report video for Nifty and Bank Nifty for 20th January 2023. Yesterday, I expected the Indian market to be super duper volatile, but it was not like that. It was just really very flat. I mean, Nifty opened near 18,120 and closed near 18,110. Only PSU banks and IT were closed marginally positive. All other sectors, it's very weird, only dropped around 0.5%. At the end of the day, surprisingly, FII turned net buyers. They net bought shares worth approximately 400 crore rupees and DII's net sold shares worth approximately 130 crore rupees. So that's what happened yesterday in the Indian market. Now let's discuss what happened yesterday in the US market. Basically, before last night from Wednesday, not just Dow Jones but S&P 500 and Nasdaq also dropped nearly 3%. Why? Investors were really confused whether to worry for recession or to worry for interest rate hike. Again, last night, US Department of Labor released the weekly initial jobless claims data for the last week. The present weakness in US stock market was created by the strong jobs data for the December month, which was released a couple of Fridays back. Now, last week initial jobless claims data, which was released last night, also decreased to 1,90,000 people, and it was way less than that of the expectation, which is 2,14,000. I mean, the number of individuals who filed for unemployment insurance for the first time during the past week was very less compared to the expectation. This increases the interest rate fear. You might say if good data comes and market falls, then I'm saying interest rate fear. And if bad data comes and market falls, then I'm saying recession fear. I understood there is a conflict there. The thing is, it's a delicate balance. I mean, it's really what stock market wants. The ideal answer is good fundamental data and low interest rate. Now, the people who control the interest rate informed all that if good data means then they will increase the interest rate further. By doing that too much can cause a more severe consequences. So that is what the recession fear. See, last month, I mean on December, on month-on-month basis compared to November, retail sales contracted over 1.1%. What it implies is that despite the strong jobs data, people were afraid to spend on unnecessary things even during the Christmas month. To put it simple, market wants bad jobs data, bad housing data and good inflation. Since all these three influence the Fed people on their interest rate decision. However, the manufacturing index or the retail sales, those kind of macros which affects the company's operation and profitability, market needs the good number. Since this won't impact much on the Fed interest rate decision, but it will directly affect the fundamentals of the stocks. Now, this strong jobs data which got the potential to make the Fed people to do the aggressive interest rate hike, and also comparatively it impacts less on the fundamentals of the stocks. Both of these was not in favor of the market, and because of those reasons, last night all three US major index closed negative. Dow Jones decreased by 0.76%, S&P 500 too decreased by 0.76%, and Nasdaq decreased by 0.96%. In terms of tech stocks, except Google and Facebook, all others closed negative. Netflix dropped over 3%, but after the market has, they released their earnings report. Their subscription increased by over 7 million against expectation of 4.57 million. In comparison to last quarter, it was increased around just 2 to 3 million. This immediately made the Netflix stock to jump over 7% in US pre-market. Then about dollar index, it dropped marginally and moved less around 101.8. Regarding 10-year treasury bond yield, it increased marginally to near 3.4%. Regarding oil, since US stockpiles showing that there was a reduction in inventories, so it's obvious on the expectation of repiling those oil stock inventories made the oil price to increase around 1.5%. At the time of this video, WTI crude oil was traded at 81 US dollars per barrel and Brent crude oil was traded at 86 US dollars per barrel. Coming to Indian ADRs in US market, surprisingly, both IT and banking stocks increased around 0.5 to 1%. Then about SX Nifty, at 3 a.m. Indian Standard Time, it closed at 18,118, which means it's kind of indicating the flat opening. So that's all about what happened on global market. Now let's discuss the India related info. Coming to stock and sector specific, today in the aftermarket house, Reliance set to release their Q3 earnings. The expectation is that on year basis, their revenue is to increase over 21%, EBITDA to increase 15%, and net profit to increase 4.4%. As I said yesterday, the stock was already down over 5% in the last 1 week and 10% from its recent peak. So for sure, we can expect some short covering. Then the second news I like to highlight is regarding the Hindustan Unilever earnings. I mean, yesterday in the aftermarket house, HUL released their Q3 report. It beats the analyst estimates and posted bigger than quarterly profit, and the sales was increased by over 16%. I consider this as positive for HUL and for the whole FMCG sector itself. So, as a summary, there was a negative momentum at the global level based on the US market and SGX Nifty close. However, Indian areas were really positive. And also this aftermarket Netflix results did able to change the US future market to trade positive now. Additionally, HUL results can make the FMCG to turn bullish. So there is a high chance that today market might trade and close positive. Now coming to technical, starting with the candlestick for Nifty and Bank Nifty on the daily chart, by combining the last 2 days, it forms a bearish harami candle formation. I mean, the opening and closing prices of the second candle is within the first candle. Generally, this is a very reliable pattern that suggests prices may soon reverse to the downside. But according to me, it's just a directionless. It don't want to go down and don't want to go up either. And that's what making the index to keep on changing and forming between the bullish and bearish reversal. However, there is one good news. Nifty closed above 18,100. So as long as it trades above 18,050, we can be optimistic that it got the potential to reach near 18,300. In case of Bank Nifty, it has to break away from its mother candle which formed on January 10th. As I said yesterday, if the Bank Nifty crosses above 42,800, it may indicate more upside potential. But if it falls below 41,700, it may indicate more downside potential. Then coming to moving averages, regarding Nifty, compared to day before yesterday it breaks the 50-day and 20-day exponential moving average. So as a moving averages summary, it turns from strong buy to just buy signal. And in case of the technical indicator summary, it's same just buy signal. The RSI value dropped slightly from 52 to 49.5 and thus it turns to neutral now. Now let's move on to the Bank Nifty. At present, that too dropped below 5, 10, 20-day and 50-day moving averages. So as a moving averages summary, it downgraded from neutral to sell signal. Then it's same as day before yesterday. In technical indicator summary, it's a sell signal. RSI value still around 46.5, which is a neutral signal. As you may know, yesterday was the options weekly expiry. So instead of options open interest, let's have a look at the pivot chart for Nifty and Bank Nifty. So from pivot chart for Nifty, at present the immediate support is at 18,020. On the higher side, the immediate resistance to break is at 18,200. Then in terms of Bank Nifty, the immediate support is present at around 42,085, whereas the immediate resistance is at 42,630. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the videos. It will help me beat the algorithm and will also motivate me to do more. Please don't make any investment decision based on this, as I'm not a SEBI registered advisor. I'm doing it for my and viewers' educational purpose only. Thanks for watching.